How are we all doing? Evening. Good. I'm good. Thank you. Yes. Cool. So let me go ahead and share my screen here. What I'm also going to do is give you guys this PowerPoint that we're going to be following today. So what I'll do is I'll go ahead and attach it in the chat for you guys now. So you can follow along with me. Just give it another 10 seconds. Evening, everyone. Cool. How are we all? Good. All right, let's go ahead and get started then, guys. So today's session, obviously the previous sessions we did the ICT basics session. So obviously getting started and the pure basics of ICT. And then we did a bit more of an advanced session with the Power of Three session. If you haven't seen the ICT basic session and you're new to ICT, I would recommend going back and watching that one. Today's is obviously going to be around basically mastering draw of liquidity and your daily bias in ICT, which obviously builds up the fundamentals around your trades. So let's go ahead and get into it. So obviously, why does daily bias matter in the first place? Right? So a profitable trading equals you need to know the right direction, right? You can master execution, entry models, and all of this, as much as you like. But if you don't have the right daily bias, your trade is never going to be, it's never going to work out. So daily bias is knowing where price is most likely to go today. If your bias is bullish, you avoid shorts, and if you're bearish, you avoid longs, right? This alone is going to help increase your win rate drastically. And if you have no clear bias, there's no trade today, okay? It's that simple once you get this implemented into your system. Now, some of the most common mistakes that people make with obviously daily bias in ICT is they trade without understanding market structure, which we'll go through today. We did cover it in the ICT basic session, but we'll briefly touch on it again today. They ignore liquidity zones and imbalance, which again is what price likes to draw to in terms of ICT. So we're going to touch on that a little bit as well. And then they obviously place their stop losses in the wrong places, which then of course gets them, to get faked out, and then price goes in their direction. And they fail to recognize displacement. Now, displacement in ICT terms is one of the most important things to look for. So we're going to be covering that also as well today. So some of the right questions to be asking when obviously loading up onto the charts and thinking about daily bias, about where your bias to go long or short is today, is where is liquidity resting? Is there any imbalances to fill? And again, where are we going? Where's our draw for the day, right? And then you also need to take into consideration always, where are we? What is the market structure telling me? Is it telling me that we're bullish or we're bearish? These are things that you need to be considering. Now, I'm sure we're all familiar with this basic sort of market structure, higher highs, higher lows, higher highs, higher lows. Is everyone familiar with this? Has everyone seen this before and is aware of basic market structure? If not, I can do a little dive into it quickly. Yes, all good. Okay. All right, amazing. Okay, so this is how most people perceive market structure, right? So market structure is always perceived online, and it's always simply put like it's a series of higher highs, higher lows, etc. But this is how market structure actually is. So we have the basic market structure on the left, right? That is how it's perceived online. That's how it's sold to you, and that's how people basically make it out to be, right? However, on the right is how market structure actually is. So if I just quickly jump onto a chart here, I'll just draw this out for you. So obviously market structure, right? Basic market structure looks like this, right? A series of higher highs, higher lows. But if you actually watch the market structure actually is something a bit more like this. It's not as clean. It's a bit more choppy. And it's much harder to read than simple higher highs, higher lows. And this was what we're going to basically go over today in ICT as well, right? So obviously the retail sort of, as you call it, quote unquote retail, is the basics of this, right? But we know that in ICT terms, the market likes to come back up, take out highs, and then continue to reverse. So it likes to trap traders either side. For example, there's traders with their stop orders resting here, which then like to sell. So what does price do? It comes back up to generate liquidity, fill these orders, and then comes back down to the other side. Again, I want to basically clarify that everyone is still all able to understand that and is still following that. I just want to make sure because it's sort of basic ICT terms, but I don't want anyone to get lost. Yeah. Okay, cool. Cool. Makes perfect sense. Okay, awesome. All right, so moving on to the next slide. Who here is aware what displacement is? That is the next thing. Obviously, as I say, we did cover these topics in the ICT basics session, but I just want to make sure everyone has the fundamental basics down before we get into a backtesting session. Yes, okay. Displacement, for those of you that don't know, is, for example, say we had a market structure shift. So obviously this is our market structure diagram, okay? Displacement would be a strong close below, indicating that the momentum is shifting in the market. So we make this strong close below, and we also leave behind some sort of imbalance. So let me just find an example. So this big push up, right, above this high, would be a strong market structure shift with displacement, because the body of the candle closed aggressively above the high and left this imbalance. It's basically indicating to us that the market is now shifted gears and it wants to, change direction. Again here, all right, this would be our market structure. So you can see here, we're in an uptrend. This is our market structure and we're moving up, all right? But then all of a sudden, we get this strong move to the downside and then market shifts gears. This strong move that leaves behind this imbalance here, that is displacement, okay? All right. Moving on to the next sort of topic. So obviously we've got market structure down. Everyone understands market structure, basic market structure. Everyone understands what displacement is. And the next thing that we obviously want to focus on, I just want to clarify with all of you again quickly, that we all understand what is liquidity. Now, liquidity is essentially, you have buy side liquidity, sell side liquidity, trend lines, right? This is where price likes to run to target, right? For every buyer in the market, there has to be a seller, right? And these larger institutions can't get filled on their orders because they're too big. So they have to drive price up to certain levels to then get basically filled, because their orders are so large. Say, for example, they have 1 million sell orders, okay? On average, an order that size isn't able to get filled because there isn't an equal buyer for a seller. So that's why we have these quote unquote draws to liquidity, right? To basically get their orders filled in the opposite direction, okay? So obviously this is an example of buy side and sell side liquidity. It's simply just most recent swing highs and lows. This is an example of trend line liquidity. So trend line liquidity here, as you can see, this trend line is building up all these orders, and above each one of these wicks is basically liquidity, okay? So the stops above this high, the stops above this high, the stops above this high, this one, this one, this one, this one. And then what happens is price then aggressively rallies to take out all of this liquidity, okay? And the other thing that we need to be aware of is imbalance in the market. Okay, so often referred to as a fair value gap. Imbalances in the market is when there's an unequal pressure between buyers and sellers. So price more often than not will come back to fill this imbalance to make the market efficient again. Okay, everyone is clear on what a fair value gap is. I just want to make sure as well. For those of you that don't know, a fair value gap is basically, actually I've got a diagram on a later slide. I'll show you that after. Okay, but in ICT terms, the market moves for 3 reasons, right? It's either seeking liquidity, it's looking for imbalance, right? And it just repeats this continuous cycle, okay? So we're either seeking liquidity to fill orders, or we're rebalancing price, and that's it, essentially. Those are the only reasons that the market moves, okay? Now, a trick to find sort of daily bias, which is quite effective, is using previous day highs or lows, right? Price usually takes out either a previous day high or a previous day low. And if we fail to displace above that high or low, we can expect a reversal on that day. So if you look at this candle here, this bearish candle, you can see here that we'd never closed below. And what happened is we took out the low of this candle, and then we formed a bullish candle, and then the next day price continued to go up. Similar situation here, we never failed to close below, and then price went up, all right? And if I just show you some examples on this, so we've got a bullish close, previous day high, that's a bullish continuation, okay? Look at this big bullish candle here, right? And we close above this high, the next daily candle is then bullish. Same in the bearish scenario, close below, and then the next daily candle sells off quite aggressively, bearish, okay? And here is another one where we fail to close above this candle and we wick above it, we take out the liquidity above this high, and then we start to sell off, okay? Now, what I'm going to do is I'm just going to go and obviously show this on TradingView really quick, and we'll just draw out some of this and we can follow it together. Okay. So for example, on this candle right here, okay, we failed to close below this candle. We wicked and we took out the low of this candle. So we took out the low there. So our next draw on liquidity for the day would then be bullish. So we would look to take out this high of this candle. Okay, that high of that candle gets taken out. Same situation happens there. So then we mark out the high of this candle. This would now be our next draw on liquidity for the day. Okay, then that gets taken out. Again, we failed to close below there, and then we push up again. I'm just showing you guys this as an example. We will obviously be doing a full back testing session momentarily, but I just want to make sure everyone understands these basics, okay? Again, massive bullish candle there. So our next draw on liquidity is up here. Okay, that never happens, but then in context here, we form this fair value gap. So now again, our draw on liquidity is up at this high. And again, we do the same thing. So the draw on liquidity is then up there, and so on and so on. Basically, as we close above each candle, the draw of liquidity continues to go up in this scenario, okay? So then again, we close above again. So our next draw on liquidity is up here, and so on and so on. Does everyone understand that method of sort of finding your daily bias via this scenario? So you can just use the daily candles and things like fair value gap. And if we essentially close above or displace, in other terms, above the previous daily candle, that gives us a pretty good idea that the next candle is going to continue that way. Can you explain that briefly again, please? Yes. Okay, I'll explain it really quick again. All right. So right. As you can see here, close above previous daily high equals bullish continuation. So this red line here, right, you can see we close above it, meaning, and we close above it with displacement, meaning aggressively. So the next daily candle is likely to be bullish, all right? Same with bearish. We close below this daily candle with displacement. The actual body of the candle closes below, okay? So that indicates that we're likely to sell off. Whereas here, we don't close above the daily candle, right? We wick above it and then we close bearish. This would essentially indicate to us that the market is likely to reverse and then continue down the other direction. Okay, so I was just marking it out here, right? So for example, here we failed to close below the low of this candle, right? We wicked, same as in this example here. You see that, and then you see this. Okay, so likely that the next day now is going to be bullish. Okay, and we fast forward. Then that closes above. Now this closed above, the body of the candle closed above the previous day. So now that would indicate the next day is going to be bullish. There we go, right? And again, the body of that candle closed above, right? So that would indicate the next day is likely to be bullish. And so on and so on and so on, okay? Does that make sense? What of it consolidates between previous daily low and previous daily high? I will cover that in the actual back testing session, and as I'm sure we're going to have plenty of examples, okay? But this is a really simple way to basically understand how to get your daily bias, right? Quite simply, okay? Now, obviously, there's examples like, for example, on NQ. If you were to go to, recent price action on NQ, like if we look at this here, right? This is pretty unclear here. Like this isn't clean price action. So ideally we would stay out the market today. Okay. Whereas if you look at this here, this candle, we basically wicked, right? So that would indicate that the next day is going to be bullish. Okay. Same sort of situation here. This candle closes aggressively below this candle, right? So then that would then indicate to us that the next day is going to be bearish, and so on and so on and so on. Don't you look at the PD arrays who are getting respected in NQ like IFVG? Yes, we do. But again, I'm just covering this simple strategy to get your daily bias first, and then we'll start adding in extra things. This is the daily time frame. I can't see. Yes, it is the daily time frame. Okay. All right. Perfect. I'm glad everyone understands. Yes, you can use the same logic for this on every single time frame. So obviously, as we're aware in ICT, price is fractal, okay? So what works on the daily works on the 4 hour. What works on the 4 hour works on the 1 hour. What works on the 30-minute works on the 15-minute, and so on and so on. So you can use the same methodology across all time frames, but obviously the reason that we use the daily time frame for this is because we're just looking to find the direction of the day, and then we'll use things like fair value gaps, order blocks, all these types of things to then find our trade for the day, because we have a bullish bias or a bearish bias on that day. Okay. All right. So the next one, obviously, people that aren't aware, fair value gaps. What's a fair value gap? A fair value gap is created with displacement, identifies instances in which there are inefficiencies or imbalances in the market. These imbalances are visualized on the chart by a 3 candlestick sequence containing one large middle candle. Essentially, the wicks don't overlap, right? So to show you this simply is I've got an indicator here that's automatically marking them out, and this indicator is also on TradeZella when you do your backtesting. So if you're unsure on how to obviously draw out your fair value gaps, they're automatically marked. So we can see here this first candle, second candle, third candle. This void in between here is a fair value gap, okay? You see how these wicks never touch, right? There's this big gap, right? But whereas you can see, for example, here, this gap is filled, right? The wicks touch, okay? There's no gap there, okay? Whereas here, there's a void. You can almost see like it's just this big gap here. That's a fair value gap, okay? It's a void, an imbalance, an inefficiency in the market where the buyers or the sellers were a lot stronger than the vice versa. So for in this case, the sellers were a lot stronger than the buyers, which left this inefficiency or quote unquote a fair value gap in the market here, okay? Does that make sense? Yes, you can grade fair value gaps, e.g. high quality, low quality. And what we do is we use Liquidity to grade our fair value gaps, okay? So let's go ahead and go back to the document. Okay, these are all just the basic concepts I'm trying to get you guys to understand before we actually dive into the backtesting session. So when I'm when I'm doing the backtesting session, you guys aren't confused and saying, "Oh, what's this? What's that?" What, you know? I want you guys to basically understand this first. Okay, order blocks. Is everyone aware what an order block is? Order blocks are also referred to as supply or demand. They're essentially the bearish candle before a bullish move up, or the bullish candle before a bearish move down. Okay, so if I look at this here, you can see the areas marked in red are our order blocks. Okay, so this here is an order block. It's the bullish candle before a large bearish move down, and you can see here the bullish candle before a large bearish move down. Okay, and just so you guys can spot this really easily on a chart, because you need to train your eye to be able to spot them quite easily. I'll just go through and mark some out for you. So here, right, order block, okay, order block, order block, okay. As you can see in all these examples, the bearish candle before a strong move up, the bearish candle before a strong move up, the bearish candle before a strong move up. Here's another one. Order block, the bearish candle before a strong move up. Here's another example. Order block, the bullish candle before a strong move down. Order block, the bullish candle before a strong move down. Does that make sense to everyone? Because order blocks are a pretty crucial part of what we're going to be doing today. Okay, awesome. What's your take on mitigated order blocks? I shall go into that once we actually dive into the backtesting session. Okay, awesome. Now, what makes a high probability order block is the next sort of thing that I often get asked. So if an order block takes out the previous candle before making the move up, that also makes it a stronger move. If it doesn't, then it's not going to be as high probability order block. An order block also needs a fair value gap before it. So as you can see here, we just spoke about a fair value gap. This is our order block. It also takes out the previous candle. 1, 2, 3, that makes a high probability order block, okay? No fair value gap before the order block, low probability order block. It's less likely to work. Does order block include the wick? Yes, it does. But a lot of people trade them differently. But in my eyes, an order block does always include the wick. Okay. So if I was marking out an order block, it would be this entire sort of candle here and the wick. Okay. Someone's asking a question. Yes. So an order block with strong displacement means that it's going to be higher probability. Okay. So when price comes back up to this area here, which we obviously haven't here, but if I drag this across, obviously this is the NQ chart right now. If you look how strong this displacement was, so we closed below this low, indicated this change in market structure, right? We swept the previous high, right? This here is a high probability order block. So chances are when NQ comes all the way back up here, then we're probably going to see a strong reaction from this order block up here, okay? So the stronger the displacement, the stronger the order block. If it takes out the previous wick as well, even better. Can you explain why number 2 was invalid? Because it didn't take out the previous candle's low. So as you can see here, this previous candle got taken out. This one didn't. So it still might work, but it's going to be a lot lower probability, okay? Do you consider the 50% of the fair value gap an important point? Yes and no. Sometimes I would say no overall. A lot of people put too much emphasis on it and then they end up missing too many trades. So I would go no, but obviously it depends on your risk to reward. I would only use the consequent incursion of a fair value gap if I was struggling to get a good risk to reward ratio. Okay. All right, so this is sort of your ICT bias framework now that we obviously understand these basic things, okay? So we want to identify structure, bullish or bearish. That's the first thing we want to do coming into the day. Go on the daily time frame, the 4-hour time frame. Are we bullish or bearish, right? Has liquidity been swept? What was the most recent area where liquidity gets swept? And we can expect price to move from one liquidity pocket to another, okay? So just go back to a chart. If we swept here, all right, so we got this big sweep here. Let's look at this wick. Okay, let's say there was a liquidity pocket there. Then we can expect price to trade down into this sell side liquidity down here. Okay, we move from one liquidity point to another. All right. So you can use things like, obviously, as I said, the daily 4-hour charts to identify your direction. Are you bullish or bearish on a higher time frame? Use market structure shifts. So for example, higher highs, higher lows. Are we bullish or bearish? Always that's the first thing to identify. And then look for trades that obviously identify in that direction. So then once we've decided, you know, this is a 4-hour bearish bullish structure, then we look for our PD arrays. So we look for our premium discount levels, right? We look for our fair value gaps, our order blocks, and then we trade from those up to our next liquidity, buy side, sell side, trend line liquidity, etc. But again, I'm going to show you tons of examples in the backtesting session that we're about to do. And these, for people that aren't familiar, are all the possible entry models that you can have to get into a trade for ICT. Okay, so if you want, take a screenshot of this. This is also in the Discord templates. So we've got ICT model 1, 2, 3, 4. All of these are your possible ways to enter into a trade. Okay, so refer to these, study these, and learn these, because these are what's going to get you into the market. Okay. Then, obviously, the more popular thing that is going around on social media at the moment is the inverse fair value gap. Sorry, sort of entry model, right? I'm sure you guys who are familiar in the ICT space are going to be seeing this a lot on Twitter at the moment. This is sort of trending, so to speak. So we will cover this today as well, and I will also show you guys how to use this in the backtesting session, and hopefully we can get some trades using this as well as all the other entry models. As I say, if you're unfamiliar with these entry models, again, the PowerPoint is in the chat, so just go ahead and download this. And then the final thing we need to understand is SMT, all right? So SMT is when you have two correlated assets. So for example, in this case, Euro USD, GBP USD, and one makes a higher high whilst the other makes a lower low, okay? So that would be SMT because the two assets that are normally correlated actually did the opposite thing. So that indicates a crack in the market, so to speak. Okay, and this crack in the market indicates to us that there's going to be essentially a reversal or some sign of momentum shift in the market. Okay, where is the option to download the PDF? I will attach it one more time in the chat right here. Okay, cool. So obviously on this PDF, obviously this at the bottom, this is just for you guys to refer back to, but it's essentially a step-by-step guide on what to do when approaching your game. So almost like a flowchart diagram. So for example, first draw out the dealing range, right? Identify your draws on liquidity, decide are we going up or down essentially on the day. Then look for your liquidity pools. So relative equal highs, trend line liquidity, session highs, lows, imbalance zones, fair value gaps, right? These are all your likely targets for the day. Then obviously think about time of day. So in ICT, we talk about time and price. So obviously you've got the London kill zone, New York's kill zone, lunch hour, often a time we don't want to trade, PM session, and all these types of things. And then we've got obviously then once you've thought about where price is going to go, you thought about the time that you want to trade. Then you want to start to think about SMTs. So look for SMTs to help obviously build up your bias. And then obviously you want to finalize the bias, ask yourself, where is price, premium discount? Actually have a reason to say, this is the reason for my bias today. So I'm bullish today because price swept outside liquidity, below yesterday's low, rebalanced the fair value gap, and now shows signs of expansion to the upside, okay? But this at the bottom here is just for you guys to obviously refer back to in your own time, okay? Obviously you want to trade when it's very, very obvious, when your daily bias is so clear that you feel like this trade has to come through. Those are the days you want to trade, right? You don't really want to be trading, for example, NQ today. And as you can see, we had a choppy day, right? And the reason is we had a choppy day is because there was no clear bias. There was no clear draw, okay? Like, look at this. Why would you want to trade this on the daily time frame, okay? And then obviously, you also need to accept that this doesn't work 100% of the time, right? You need to obviously focus on those very clear things, and you need to be okay with accepting that 30% of the time, you're probably going to be wrong, okay? And you don't want to be forcing trades when the bias is unclear. You want to trade those most high probability setups and the most high probability days, all right? Then obviously this at the end, okay? These are the sort of things you want to be looking for. So write these down. Just have a sort of think about these when coming into the day. Where are we structure-wise, market structure? Where are we going? What liquidity are we seeking today? You can use the obviously previous day high, previous day low method. Is there any imbalance that we're looking for? And then you want to be entering trades during kill zones using order blocks and fair value gaps, okay? As I say, you need to develop a clear bias statement. I'm bullish today because price swept sell side liquidity below yesterday's low, rebalanced the fair value gap, and now it's showing signs of going up, okay? Always have that in your journal. Write that in your journal at the start of each day. The reason why you have a bullish bias, the reason why you have a bearish bias, okay? Is that all good for everyone? Are we okay to jump into the backtesting session? Yes, awesome. Good stuff. I'm glad everyone's following along. Obviously, if you do have questions after, I can answer them as we go. Don't worry about that. Yeah, this is being recorded, so you'll be able to rewatch it back later if there's any confusion, okay? All right, cool. Let's get into it then. So let's head over to TradeZella and create a backtesting session. Now, because I want you guys to control this, what asset should we trade? What asset should we do our backtesting session on? Okay, let you guys choose. Okay, so it's very clear NQ and ES is what we want to trade today. Okay, futures, MES, MNQ, and our start balance can be 100,000. Yeah, we'll do them both because everyone suggested MES or NNQ, so we may as well do them both. What balance should we do, guys? 100,000, 200,000. Okay, 1,000, 10,000, 100K. We'll just do all of last month because I don't think we're going to be able to get more than a month in. But essentially, this is going to be quite useful for you guys because I'm basically going to use all the things that we just discussed, and you'll be able to see how, in my mind, I frame up these trades and I take trades, right? This isn't obviously scripted, so there could be some big losses in here, but we'll see. Okay, so on the daily chart, let's see what we've got. So here on the daily, we had what we were speaking about, right? We failed to close below this low, okay? But using the other things that we've also looked at, right? What have we got down here? We've got this order block down here. And what it's all about is using all these different things, such as order blocks, fair value gaps, liquidity, right? And using them to frame together a bias, okay? So where obviously are our draws, okay? So up here, we've got a fair value gap on the daily. Down here, we've got an order block on the daily, right? We've got this sell side liquidity, okay? So odds are most likely I would look to be bearish. Now, you could obviously pull all the way back up to here, all right, and do something like this, and then we look to come down here, okay? But let's see. So obviously I haven't got a clear direction. I haven't got a clear target on the daily. So then we scale then to the 4 hour and see what we've got. Now on the 4 hour, looking at this is actually MES. So what I'm going to do is pull up the NQ chart next to it, because I use MES to basically help with my analysis. So SMT, things like that. But I use NQ to actually execute on because I just find it to be a lot cleaner. Okay, so obviously on this, go ahead, adjust all your chart colors to whatever your preference is. Let's just check the NQ chart on the higher time frame as well. Okay, so NQ is slightly different. So NQ, obviously we had this here. But for those of you that understand sort of the power of 3 and open high, low close, we've got this daily order block here, and we've also got a fair value gap here in between, and we opened up higher than the candle. So more likely than not, we're going to push down today. So I would look for something like this, and then to possibly trade into this order block down here, okay? And here is our sell side liquidity. All right. So let's see. I mean, I'd probably looking on the 15-minute. Okay, so we've got a 15-minute gap on the day. So I'd probably look to see this gap get filled and then us push up before we come down. So let's see. Let's just jump to New York session here and see, because obviously we're only going to be trading inside the time zones that obviously we trade, such as New York session. So here it's looking pretty stale. No reason for an entry yet. Again, I'm only looking for sells because that's my bias for the day. So let's sync and see if we can get some sort of entry. And if I'm watching that on the 15-minute, I want to be watching this on the 15-minute for some sort of SMT or something like that. So let's just skip through. Okay, so we get a massive sell-off here. Okay, and we did actually get, so this is our displacement now, right? This is the market basically showing, clear displacement to the downside, right? So now this is obvious that we've shifted bearish, right? As I spoke about this displacement, this strong move down. What do we also have here? We've also got SMT, right? So if you look on this one, on the left, okay, this created a higher low, whereas this created a higher high on NQ. Okay, so ESNQ, two correlated assets, one put in a higher high, one put in a higher low. Okay, SMT is one of the most important things that you can actually look for, and it's one of the most strongest sort of indicators that the price is about to make a strong move. Because what happened after this SMT created, we had this crazy sell-off. Okay, so now we've got this shift. We kind of want to mark out our dealing range, which is, this high to this low, and we don't want to enter anything unless it's obviously at least a 50% retrace. So this area here. Now, what have we got that lines up with that area? Let's see. So we've got a fair value gap up here. We can enter off. We've also got this order block that was used, which should then be turned into a breaker block. So both of these areas, I would look for an interest and a pullback. So let's see if we can. So we do pull back. It's not amazing. Going on to the 1 minute. Again, ICT is all about just refining and refining and refining. So here was our 1 minute order block. I would have probably taken a sell from this here, to be honest, as I'm not going to get an entry there, possibly on this fair value gap here. Okay, I'll take a sell here. Let's have a look. And now I just put my stop loss there. And we would target down here first TP. This is our first level of sell side liquidity. I appreciate for some of you that are new, right, it's going to take a minute to get, right? Because obviously it can take people, you know, some people months, years to sort of get these concepts. So it's going to take a minute to study, okay? But that's obviously why backtesting, especially in this, is so important. Now, what we also want to check is that minimum we pulled into this 50%. So yeah, we're well in that 50%. We also rejected what's called the golden pocket, which is the 61.8 to 72 basically, or known as OTE in ICT. Okay, so this is optimal trade entry area. So that's another confluence for us, okay? So let's see. Now our targets would be obviously final TP down at this low. All right, first TP where we'd look to take a partial at this low. Okay, so let's go ahead and sell. All right, so we're just risking just less than 1% there. And we'll take a partial there and we'll go there. So let's see. Okay, so we start moving away quite aggressively there. And waiting for some sort of clear displacement. And we do get screwed there. Another entry you could have had was here. All right, so as we inverse this fair value gap, you could have entered there because that's quite strong displacement for the fair value gap. I need something clear to say go break even. Nothing yet. Let's hope we don't get stopped on this. Let's scale up timeframes. Ah, here. Okay, this is a good example. So you know how I said price was fractal, right? So obviously look at this, okay? As we're using the daily time frame method, we've got this bullish candle here, right? What do? We fail to close above it, we wick quite aggressively, and then we make a strong move down. If I just pull back to this, where is it? See here? Looks the exact same, right? A clear indication that the market is now going to go the other way, okay? So now when I come back to this, that is, for me, is extremely confident we're going to move. And then we've also got this fair value gap here. So now it should go in our favor. And which does sell off. We close 50% here. This is our first TP. And then we just leave the rest to sell off down to the final take profit. Which does hit, doesn't hit. Let's speed this up. Okay, which then hits. All right, so there we go. Does everyone understand that first trade? We used SMT, we used fair value gaps, we used order blocks, we used all this kind of stuff. We used the same method from the PowerPoint, okay? Does everyone see the similarities between what we were using? Obviously there, that's quite fortunate. You know, that's a really good, strong trade to start with, but that's what we got. First TP was here at 122, and then down. I think I actually put the wrong take profit. Oh yeah, it was supposed to be a lot bigger. Our take profit was supposed to be here, so we got a 1 to 4, but we should have got 1 to 6. But would I actually hold that long in real markets? Yeah, probably, depending on the higher time frame. Yes, it's completely fine for newbies to use fair value gap indicators. I even still use fair value gap indicators. Like this is my trading view now. You can see my fair value gaps are auto marked. Again, on TradeTeller, if you search fair value gap, we have that indicator there for you to make things simpler. When do we usually go break even? When the first take profit is hit. Could you repeat why you decided that market would not come to the higher fair value gaps anymore? Because of this SMT, right? You don't necessarily know. You never know 100% what the market is going to do. But this SMT, this strong displacement, right, basically confirmed to me that we were going to go down. Okay, that's the bearish pressure in. Granted, we had this order block here, which created the displacement. Okay, so this would be the order block that you wanted to enter from, because this created the displacement. This made the change character of the market structure shift. Okay, you always want to enter off the order blocks that create the change in market structure, as they're going to be the highest probability. And then looking at this as well, further displacement. Okay, but let's jump to the next day and see what we get. I want to try to get through as many examples as I can here, and I am spending a bit too long rambling, so yeah, I want to try to get through as many trades as possible. So let's see, let's clear up our chart. Fresh day, new stuff. So here we still haven't taken out. Okay, so we did take out that liquidity. We haven't tapped this order block yet. So overall, I would still like to see that order block tapped. But we could obviously continue a bit. So overall, I would still like to see, although we took out this liquidity, we still haven't tapped that order block. So I would still like to take sells, but it wouldn't be the cleanest of days here. Okay, so this wouldn't be something I would go in heavy today, basically, is what I'm trying to say. If I look on the 15-minute time frame as well, like there is the possible buy setup here. We've got this order block. We've got this liquidity, you know. So it's not perfect here. Just scaling in further. On the 5-minute, we do have this order block. Again, it's not super clean though. What time is it? It's 12. So that's some good displacement though. So there we had a strong close below. We left all this imbalance. That to me is a signal, just because of how much imbalance is left. When you see strong imbalance like that, so when you see a really strong displacement move, that's normally an indication that the market's about to go. So you could take a trade just from this fair value gap here. If you were gonna though, I would take it literally like no risk whatsoever. Let's just take it, see what happens, because it's just a backtesting session, and you would target obviously the order block, but in a real life scenario on the day, you would just target there. So let's target there. So here, similar situation on the 1-minute, right? We fail to close above this high. We make a strong move down. So there's your indication for a sell. So let's just do a sell at 0.5 risk, because as I say, it's like this isn't a high probability day. It's not super clear on the high time frame, but we do have a clear indication here, right? We took out some liquidity here, just on the 5-minute. So we took out that high. We tapped into this order block. We had an imbalance before that order block. We took out the previous liquidity. What makes a high probability order block? All these things. We have this strong displacement that left behind imbalance. So let's see. Okay, so that one does end up hitting TP. Main draw, obviously continuing down to this daily order block. So let's just see where price continues to go. Does it get down there? It does eventually get down there. So that would be our draw on liquidity to obviously get for that day. All right. Does that make sense to everyone? Does everyone follow that trade too? Again, as I reiterate, this was not a high probability setup, right? This wouldn't be your A+, but this would be like a B setup. More complex, but yeah, 100% more complex setup there. Yeah, risky setup for sure. But obviously, if you know what you're looking for, so for example, you had this, right? Even here, you could have got the different move, okay? We broke with displacement, strong close below on the 15-minute, right? Then we had all this imbalance back here, okay? We came back, we pulled into this fair value gap, which is in what, right? It's in discount. This is our range, right? Same area again. This is 0.618 to the 0.71 on. the OTE of that range, okay? So then we tap perfectly back into that OTE and that fair value gap, and then we sell off to our draw and liquidity for the day and the higher time frame, which is the daily order block. All right, cool. All right, let's move on to the next day and see what we get. So at this point, right, at this point, this price hadn't printed yet, okay? But yes, you could have extended it down to there. You still would have had the exact same result. Price would have pulled into the 0.618 to the 0.71. You would have still got that OTE, okay? Do you use CISD for better confirmation? Yes, you can, but again, I don't want to start throwing every sort of possible ICT method in here and make this too complicated. So you don't use a... Yeah, so you genuinely wait around throughout the day until you see something dead clear, right? Most important things is where's your daily bias? Where does price want to seek today? And then also displacement. Always wait for displacement, right? If price is doing this, so you can see this ugly price action here, why would you get into this? Wait till you start seeing these strong, aggressive candles and then wait for a pullback and get in, okay? So this, we don't want to trade. This, we want to trade because it's aggressive, it's quick, it's delivering to liquidity or price, whatever, a lot faster. Whereas this, you're just going to get chopped around in all day. So when you see action like this, stay out of the market until you then start to see aggressive price like this, then you know it's time to take a trade, right? Always wait for too much confirmation than not enough. But let's go on to the next day. So let's just clear our charts again. So we did, obviously, thinking about what we just spoke about, okay? On the daily time frame, we tapped into this order block. We took out this liquidity. And we also failed to close below this daily low, okay? So we swept that daily low. We took out this. We tapped into this order block. So our bias for today is going to be, I'm going to let you guys finish. Make sure you understood. Our bias for today is going to be, come on, bullish. There we go. Good stuff. All right, that's how I check that you guys are understanding. Cool. Everyone's following. Cool. All right, so our bias today is bullish. So let's go on to the lower time frame. What do we have? Not seeing that much, I'll be honest. Okay, so the only thing I really see here is this 30-minute order block. Let's draw up the highs to the low of the range. I mean, it's a seriously discounted order block. That's kind of the only setup I can see. It's the only place that I see any sort of imbalance or trade to take from. So obviously, as I say, right, what did this order block do? It took out the previous low of the previous candle. So we took out that, right? It's got a fair value gap before it. Okay. And that's our order block. That's the only potential trade I can see here. And we would look to target, I don't know, somewhere up here, possibly here or here. Let's see. Do we get a pullback? Okay, we tap into it. So now what we don't want to do is just enter off this willy-nilly, all right? So we want to wait for some sort of confirmation because this isn't essentially a very high probability setup, but if we get some sort of lower time frame confirmation, then it becomes one. So let's see what we've got to play with. So we either want to look for a 1-minute market structure shift, just coming back to here, all right? So coming back to the PDF, where's the entry models on here? Entry models, my apologies. Where did I put them? So here we want to wait for one of these, or we want to wait for an inverse fair value gap, okay? These are your lower time frame entry models. So just coming back. So we either need price to displace above this high, or we need this fair value gap to get inversed, okay? So let's see if we can get one of those. Okay. So the reason this inverse fair value gap would work, right? For an inverse fair value gap to work, you need it to obviously sweep liquidity just before it inverses. So because we took out this low here, right, you can see just before the move up, we took out that low and we also took out that low, right? This is basically a candle that's saying, you know, screw you, I'm going to go up now, right? So let's see if we can inverse the fair value gap. So initially we don't. We do create this fair value gap here. Oh, that's the wrong button. All right, so we've got a fair value gap here. This technically would be like a 30-second market structure shift here. So if you're really aggressive, you could get in there, but I would want to wait for more confirmation personally. So we don't get an entry there. Still waiting, still waiting. Okay, so we do inverse it there. We haven't broken this low, so this is still technically valid. We do also have an inverse fair value gap there, and we do have a break of that high. So this could be, because we failed to make a new low, and then we broke above this high, that would be a market structure shift here. So I would look to enter probably just on the retest of that fair value gap, stop loss below there. Where would be our first take profit? We'd probably look here. Here would be our first take profit, and we'd look to go break even. Next good one would be here. To be honest, I think you could hold this all the way up here, considering we've just tapped into this higher time frame daily, but I would go break even here. So let's see. We want this to be a limit. So let's see, yeah. Oh, that was incorrect. Hold on. There we go. Limit. All right, limit set, buy. Okay, we do get tagged in, and it runs up straight away. That's after hours session. It's not after hours session because I'm on UK time, so it's slightly different. So yeah, we're break even at this point for sure. You could possibly hold all the way up here. So obviously that high would be your final take profit. Realistically, would you do that? Probably not. You'd be pretty happy with the profit. We've inversed that fair value gap, so it does look like it's going to continue to go up. But so we hit take profit. Let's see if it goes all the way. It does continue to go all the way. And realistically, at this point, it's 8 p.m. You're already out the trade. Could you trail the stop? Yeah, you could have trailed the stop all the way. So we take out that high. You know, if I was just trading the stop, my entry's here. All right, I've got this order block here on the 1 minute. Okay, so I could just trail my stop up to here below this order block, and then this order block gets formed. Trail your stop below here. This order block gets formed. Trail your stop below here. This order block gets formed. Trail your stop below here, etc., etc. Okay, that's one way you can do it. How do you trail your stop loss in backtesting? You just drag and drop it, so you just move it into profit like this. So you just keep dragging it up as you go. All right. Yes, this will be available to rewatch. Okay. Is CISD almost the same as a change of character market structure on lower time frame? Yeah, it's very, very similar. So a CISD is essentially a flip of supply versus demand. So for example, a push above this order block, right? So this is obviously an order block. Because we flipped that quite aggressively, there's our CISD, because that was our order block that was gonna supposedly continue to push price lower, right? But instead it doesn't, it flips and it goes to the upside, so that would be your CISD. Should we implement new week opening gap end dog? Yes, again, very strong draws of liquidity. We can cover them in another webinar, but again, I feel like this already relatively getting more advanced, so I don't want to make it too complicated for everyone. Okay, how do you set up a fair value gap? So if you just type ICT FVG on TradeZella, they'll automatically get marked for you, okay? All right, so let's go on to the next day. What time are we on? 54. Okay. Let's remove that. So what are we looking for today? Like, this is a crap day. This is rubbish price action, right? Look at this daily, okay? This, to be honest, is not a day I would look to trade, okay? We've just tapped into here. All right. Like this, it's just not clean. Do you see what I mean? It's just not very clean here on the daily. It's not clear. So then you would scale onto the 4 hour. So you might look at this. So this could go either one way or the other, right? You've got liquidity up here, equal highs. You've got liquidity down here, equal lows. Looking on MES, same thing. So there's no SMT either. So like, yeah, I would probably try stay out of this day. If I had to take a trade, I mean, it could go either way. It's like a 50-50, right? Maybe we bounce off this order block, or maybe we bounce here and go down. Again, do you see how I mean, though, how the other days were quite clear to trade, right? We had a clear direction. We had a clear daily bias. Here it is literally 50-50. It could go one way or the other. So why would I trade today? It doesn't necessarily make sense. And this is going to be a lower probability day. But I'll run through this and see if we get set up, and I'll just try to show you an entry model. So let's see what we get. So possibly, you know, we'll push up from this 1 hour. Okay, so straight away this 1 hour gets rejected and we start to break through. Okay, so this, in my eyes, this demand has been, or this order block has just basically been invalidated here. So we would probably look for sells at this point. So your places to look for a sell from would be here, here. So this fair value gap, this fair value gap, all that order block. Let's draw out our Fibonacci. So we're in that sort of OTE area, our optimal trade entry. So you could look for a trade here. Again, I wouldn't trade today regardless, but again, I'm just trying to see if we can get something. So I'm on the 1 minute. We do also, thinking about it, have this massive 4 hour fair value gap though. So this is pretty good displacement. Let's just scale this down. Oh, I've accidentally put that on the 1 second. My bad. I mean, let's see if we can get clear market structure shift. So this would in fact be a market structure shift. We close below that low, we leave displacement behind. So you could possibly take a sell here. Again, I wouldn't be a fan of this though. This entire day would be a write-off in my eyes. I would just target there if I was gonna. I mean, we'll take it because it's a backtesting session. But do we get stopped? Okay, we get lucky. At this point, I'm going break even. There's no way I'm holding on to that. So at that point, I'm break even. Do get quite lucky, to be honest, there. It does run for take profit, but again, that's not a day you'd want to trade. Not in the slightest, okay? The only reason that I had any sort of confidence in that was if you look, so you remember we spoke about displacement and imbalance and inefficiencies, right? This is a massive 4 hour displacement, right? This big 4 hour fair value gap, okay? That is a big inefficiency. So what do? We pull back into the inefficiency and then we continue to sell off. Why wouldn't I trade today? Okay, let me just reiterate. If I go back to the start of the day, so initially when the market opens up, right, I can only see this, okay? But I also wicked the previous day. So if anything, I've got bullish bias and I've also got bearish bias at the same time. It's very confusing. Like on the 1 hour, here, I've got these equal lows. I've also got these equal highs. And I've got setups going both ways, right? I've got this fair value gap to sell down from. And I've also got this order block to buy up from. So it's kind of 50-50 on where the day's going there. Okay. Yes, you could have used lower time frame market structure and things like that to get in there, but it's not going to be as high probability. All right. So yeah, let me just check if there's any questions. No. Okay. Let's go on to the next day. As I say, a lot of ICT though is just practice and practice and practice and practice. It's screen time. It's learning these basic things, and then it's learning to see the candles, how they react, right? This in terms of ICT is kind of a more basic level understanding. But if you were to go watch, say, the Power of Three session that we did, that's a lot more advanced and can get you really, really precise entries. Perfect. Thank you. Why do you use 61.8 to 71% fib? I've just found over my time that it's slightly more accurate. Okay. But again, that both work just fine. I wouldn't worry about it too much. How do you mark an order block, and does it act like demands? I did mark them all out here. If I come back to this NGU chart, pretty sure. Yeah. So it's like the up close candle or the down close candle before a strong move up. So this broke this high quite aggressively. Right, there's your order block, there's your order block, there's your order block, there's your order block, the down close candle before a strong move up, and vice versa, right? The up close candle before a strong move down. Okay. Can you get the slides? Yes, I'll send it one more time, and then we will continue the session. What time is it? We're almost an hour in, so we'll do a couple more days. Are you guys finding the backtesting session useful? I just want to double check that you're actually finding it useful. Yes, amazing. Okay, cool. Great. Cool. All right, we'll do a couple more days then. I always end up doing these sessions and then I always get into it with everyone. And then I end up like, it ends up being like a 3-hour backtesting session by the time I'm done. All right. So, right here on the daily, let's start the same process as we've done for all the other days. So let's just clear all our markings out and let's see what we're dealing with. So I'm going to be bearish on this. It doesn't quite. So obviously we closed below yesterday's previous low, right? That's a strong close below yesterday's previous low. We've kind of already invalidated this order block. Okay, so you see how we took out the bottom of this order block. That order block is now invalidated. Okay, so if anything, and we closed below yesterday's low, so that's going to give me a bearish bias coming into the day. Let's just check out this. Yeah, the exact same. Okay. So let's go onto the 4-hour and see what we've got here. Do you invalidate with wicks? Yes, wicks can invalidate. When we backtest, do we just start a random day or first of the month? Which time frame do we start? I would always start from the daily and make your way down to the 4-hour, or 1 hour, 15-minute, 5-minute. If you're trading live, I would even start on the weekly to try to get a weekly bias on, say, on Monday. And yes, we invalidate with wicks. Sorry. Okay, so that's the 4-hour. So we've got this big order block here. All right. I mean, looking on the 15-minute, we've got this here. Like this, we did take out that high, but then we've also got this high here and this little fair value gap. And this is kind of accumulation, right? This is just price going sideways, accumulating orders, kind of trapping people. So we're looking at this, we're just seeing sideways movement. So there's nothing significant here yet. So I would want to see, if I'm going short, I want to see at least this fair value gap up here get tapped in. Ideally, this 1-hour order block. So let's see. So it starts to move away without us. I mean, there's no real displacement. There's not really a decent fair value gap here. So I wouldn't, this would be low probability because look at the size of that displacement. Although it's a strong close below, because there's not a big fair value gap like this, for example, this is a nice big fair value gap. That's a clear imbalance in the market. This is kind of a bit rubbish. So that doesn't quite cut it for me. Okay. Did we have news? Okay, yeah. So we had 8:30 news. We had unemployment rate, and we tap into that. We take out all these highs and we tap into that 1 hour order block. So you could still look for sells. I think you're going to struggle to get an entry though. Let's just check ES. Let's see. We've got this 5-minute fair value gap. Could look to inverse that. Yeah, it's okay. It just kind of sells. So we got the bias on the day, but we didn't really. Okay, it comes all the way back. Any SMT? No SMT. Continues to sell. I wouldn't be a massive, although I've got the bearish bias on the day. Again, this price action is not very clean. How it's so choppy. We do inverse. It probably will continue to sell off. Yeah. Probably take out these lows. But again, there's just no clean entry. There's nothing that's worth putting your money on. The only possible entry you could take here is this fair value gap here. That's kind of the only thing I see. Just trying to think. I'm not the biggest fan of this up here because it's not an SMT. Because ES and NQ, you see how they both matched each other. I mean, you could take a punt from here. Put one con. Like your stop loss is massive as well. That's the problem. Now I'll just target those lows. Let's see. Okay, so that does come through, but again, it's not the best. So where's now price looking to seek? Where are we seeking? So the next price that we kind of want to seek is probably these lows. Okay, again, a bit of a scrappy one, a bit more complicated. But yeah, let's just skip to the next day. Okay. Trendline liquidity, 4 hours bearish. Yeah, I agree. It was very bearish, but it just wasn't the cleanest price action, which is why we took the sell, but it wasn't the cleanest. We do have this gap up here. So that's someone that was speaking about new day opening gaps, new week opening gaps. There's one there, whoever that was. So let's check the higher time frame. What have we got? So we did end up chasing that liquidity that I marked out that we were after yesterday. Let's see on the 4 hour. Okay, the 4 hour looks good. So you know how previously in the PDF I said price takes liquidity and then moves to the next liquidity, right? We took out this high. Okay, you see this high here that we put in. It's quite a clean sort of take, and then we sold off quite aggressively. The next liquidity, so price takes liquidity and then seeks the next liquidity. So we took out this liquidity and now we're seeking this liquidity. So that's my bias for the day. All right, it's quite clean bias, I would say. So entries that we possibly have is this order block, this fair value gap, it looks like it already tapped in. Yeah, it did. All right, well, my daily bias is down at this low. Let's see if we can get an entry. Okay, so it takes out the low. There, we don't get an entry on that day. All right, it is what it is. Not every day you're going to get an entry. What is a stronger to target for entry, fair value gap, or order block? Order block will give you 9 times out of 10. Will give you, when looking for an order block, right? For a high probability order block, you want to see something like this. Imagine this is your order block. A really high probability order block will look something like this. All right. So this is kind of what you want to see. Right? You want to see some sort of inducement or a high put in before the order block. Price comes up, takes out this high, then taps the order block, and then you'll get a really strong reaction. We do a whole webinar, and there's a whole playbook in the playbooks templates area around just this. Super simple strategy to follow. But yeah. Okay, so that low got taken. I mean, I've not really got a clear draw now for the rest of the day. I'd end up just chasing price. My next sort of area to look for. So where I've got no liquidity, right? I've got nothing to look for. We took out all this liquidity. So if I haven't got liquidity to look for, what am I going to look for? I'm going to look for imbalance. This is the next area of imbalance that I'm looking for. So on the higher time frame, this is now my draw. Can you point the fair value gaps and order blocks again? Okay. Right. This here to this here is a fair value gap. These wicks don't touch. That's a void. That's an imbalance in price, okay? The order blocks are, let me just show you. Order block, order block. Let me delete this. Order block, order block. Okay, I hope that's clear. So it's the up close candle before a strong move down. Can you point out an inverse fair value gap? So an inverse fair value gap is the same, but price inverts it. So let's see this fair value gap here. That's a fair value gap, but instead of it getting respected, price inverts it. So then you can use that fair value gap to buy off instead, like so. See? Okay, so yeah, let's see next day. So back onto the daily. So yeah, our draw is here. I don't think we've got any trades, but this is our next target going into tomorrow. So let's see what we get. Okay, so yeah, that gets hit. That's kind of annoying. We missed that entire move. So now that we've tapped into this imbalance, we would now look to, and obviously our daily bias for today is we took out yesterday's daily low. So what are we? Does everyone remember? What are we? We tapped into imbalance. We took out the previous day low. We didn't close below it. We are bullish. Yes. Good work, guys. Good work. We're back inside the range. Good stuff. Okay. So we're obviously in premium of this range right here. So we want to at least retrace into 50%. Optimal trade entry area is here. So minimum, we want to see price pull back to here before we could look to take a long. So let's see what we get today. Okay, we trade back into that area. So let's go on the lower time frame and see if we can get an entry. So here we got a nice 15-minute candle, right? Same as the daily time frame sort of strategy. Here's the low. We took out the low, right? We didn't close below it. We closed bullish. So that's a good indication to now go up. So I want a bit more than that though. We do have this fair value gap that we have inversed. Not quite. Okay, now that's inversed. So if we could come back, I mean, you could just take a long here, to be honest. Depends on the risk reward. I mean, I like the bias. You could target here as your first take profit. Oh. And here is a second, and so on all the way up here is a third. Yeah, let's take it. You could also wait for a retracement, right? You could wait for it to come back into this order block if you want to get more full refined entry. But again, it's on your personal preference. You need to back test, find out what works best for you. See how it does come back. So I should have waited to get a better entry. See how it taps the order block perfectly, all right? So if we were more patient, we could have got a better entry there, and we would have got like a 1 to 4 risk reward. Instead, we're dealing with a 1 to 1.5. And can we push up? We do come all the way back down. So now I'd move break even because we've taken out this high. And there's our TP. And then let's just see what would have happened if it went all the way up or if we would have got stopped. So it would have hit take profit 2. Does it go for take profit 3? It doesn't look like it's gonna. Is this strategy applicable to swing trading? Yes, it is. As I said, price is fractal. What works on the lower time frame will work on the higher time frame. What works on the higher time frame will work on the lower time frame. What time are we at? We're on quarter past. Okay, I'm going to wrap this one up, guys. I hope, obviously, you guys have enjoyed this session and got some usefulness out of it. Again, we can always do more backtesting sessions. That's not a problem.